What's up, everyone? Let's talk about the week analysis, the pre-market week analysis. I was looking at my higher time frame, and then I noticed that price reached the minus 4.5 is standard deviation from the offset of this fractal consolidation. So when you have like a big candle that make a low like this, I never measured the candle low to the high. I just measure the wick, the offset, this the manipulation of this candle. So price delivery on Friday minus 4.5 standard deviations. After price reached that level, we start expansion low, and if I get the measures from the 1 a.m. candle of the 7-hour chart, the Friday 1 a.m. candle is the doji that was made and took the liquidity of the 6 p.m. candle. We have the minus 2.5 standard deviation zone, and the price reached the equilibrium of this price, like right here. So when I saw this, this is a retraced pattern for me. Why this is not a reversal? Because we never touched minus 2.5. That should be a reversal level. Or if we just touch the minus 2 and price rejects right away. And then also I measured the offset of the 8 a.m. candle. It was the candle that made the high. So this is the manipulation of the candle, and I measure and make the projection to the low. So the week high to the body, price close below the minus 1. When we close below the minus 1, it's a confirmation that we keep going down. It's not a retrace reversal. So looking to this level and this here, I'm bearish for this week. So I'm expecting price to retrace into probably 0 of this measure. And also I forgot to mention, if we got the range from here to here, we retrace into the 0.786 zone. It's a level of a retrace of this price leg. So we expand up, arrive to a higher time frame levels, the minus 4 is standard deviation, minus 4.5. So we retrace it to the very strong OT level, the 0.86. So I'm expecting price to retrace until probably to 0 of this zone. That matches if we measure the range now. Let me delete this one to get more clear. So to the high, to this low, this 0 level is almost the 0.5 level of this retrace. It's 50% of this level. So if you have a continuation down, price retraces around this zone, 50% of this level. Also fill this fair value gap, this BC. So price probably not close above this one. You just fill, and we trade it down. And I'm looking to trade to price expansion lower, at least to minus 4. Minus 4.5 is standard deviation of this measure, the 6 p.m. doji. Also, something about could be a little bit below the minus 2 is standard deviation of this offset, because that will match like this zone here. But if we close below the minus 2, instead of this reversal here up, we probably trade it down until minus 4. That should be the full expansion. But I mean, if we close it below to minus 2, to get to this level, probably we don't get on this week, just on next week, because it's more than 1,000 points. Okay, price can move this, but I don't know if you have the strength to move it like in the first week. If we check this order chart, price right now is still in premium, because we above the 50% of this monthly dealing range. And after the opening, this level will be updated. So probably price would retrace to 0.618 or 0.705 of this range, most likely 2.618. This is usually the level for retrace of big ranges and then expand up. So I'm bearish for the week, but I'm still bullish for the month. And if you look for the seasonality chart, for the last 5 years, Nasdaq started with higher prices on the first week of February, but the last 10, 15 and all-time measure, it started with lower price. This is not like exact levels, it's just to have an idea. So that's my weekly analysis for Nasdaq. I'm expecting like lower prices to one of these two levels and then reversal up. Now let's talk about crude oil. Yeah, for the crude oil, we have like a clear levels on the 9-hour chart. I measured this last doji candle that made this swing high, and we have -4 and -4.5 standard deviations on this level. So if you see, price touched 2 times the -4, but never touched the equilibrium of this zone. So this for me show me that price have unfinished business down here. So what I'm expecting for this week, price sweep these lows and retrace around at least to equilibrium of the zone or the -4.5 and then expansion higher. If we look to seasonality, we have crude oil start the week with lower prices and then going up, and then for this chart, price is still in premium, but after the opening, probably we're gonna have these levels updated. So we already have a retrace at least to 50%. So same as I said like about Nasdaq, probably we respect these levels, or we touch this -618 and going up. Also, the commission of traders, these numbers start increasing. So it seems we have like higher prices for this week. And so that was my weekly analysis for the crude oil. And now I'm talking about the gold. So gold price already hit the 50% of the -3.5 and -4 standard deviations of this measure here, this last swing low. And so after I saw price touch the zone, the -3.4, and rejects on the equilibrium of -3.5 and 4, for me is a reversal pattern. So I'm looking to see lower prices in gold after this. So I measured this last rejection block candle, and these are the projections we have here. So we most likely have a retrace to some levels around here, and then an expansion lower. If we look into this chart here that has the monthly dealing range, you can see price swept the highs of October 31st. So swept the highs and was the dealing range high of the monthly levels. So I'm expecting pricing going lower. So after the opening, these levels will be updated. So if I'm looking to -4, -4.5 standard deviation of this zone, 2689, 2672. And if we measure the new range, that would be from here to here. The Fibonacci levels match this zone here. The -4, -4.5 standard deviation that I project in the other chart match these levels. That also be closer to the lower quadrant of the monthly dealing range. So probably price will retrace into these levels and then expand up again. The SOI start decreasing, so this is why I'm expecting lower price for this week. And if we take a look for the seasonality, as you guys can see, February started with a lower price in all the levels: 5 years, 10 years, 15 years, 30 years, and now time season for gold. So that was my pre-market weekly analysis for gold. If you guys enjoyed this video, please share, like, subscribe, drop a comment below, and I'll catch you guys in the next one. Peace.